Welcome to the Traders Clinic, your regular shot in the arm of trader insights, philosophy and knowledge, brought to you by two professional money managers, Ali Crooks and Charlie Burton.
In each show, we answer your burning questions and we cover all things from the world of trading. So here we are.
What's up with this show?
Well, I'm a little bit nervous.
Oh, yeah?
I'm a little bit nervous about asking this question because I think I know what's coming. So the main subject of today's show is the hardest trade of all.
Now, we were having a coffee earlier on and I did sing a little bit of Whitney Houston. It is the hardest trade of all. Anyway, so most people won't even know Whitney Houston probably nowadays.
Well, I'd say it sounded better in the coffee shop. I'll just say that.
Yeah. So the hardest trade of all, we both agree, is when you're in a nice profit and it hasn't got to wherever your targets are, and it just rolls over and then becomes a stop out, or even you might have trailed your stop to break even, but it's still a pain when you've seen that open tangible, so to speak, tangible. You can see it in your P&L, and then it's rolled all the way over. And I do think that's harder for most people, myself included, than just a straight stop out, because you've been in the trade, you're being rewarded for your patience, you're holding on to the trade, you're doing all the things right, and it doesn't quite get to your target and rolls over. I think that is probably one of the hardest emotionally trades to have. Would you agree?
Totally.
On that? I'll add in a minute.
You totally agree. I think it comes back to the process of logic versus emotion. So, and also it's a bit of it's almost a scaled process. You ask, I've often asked a new trader, which would you do you think you'd find harder? Did you find, 2 losing trades on the bounce, or a trade that's gone into profit but you get out for break even? And most of them say the losing trade. Yet once they actually experience it and go through it, they realize that, even like you said, even if they're not losing, technically they don't make a physical loss on the trade, they feel as though they've lost something, because as well, they know logically the profit isn't theirs until they bank it, but there's certain things that happen neurologically. You've been there, I've been there in the early days, where you think the trade to its end, you imagine the trade hitting its target, and you go through this battle of, well, I know it's not there yet, but visually seeing the profit there on your phone, if you're checking it on your phone, you start to buy into it. You start to, I think the phrase you used was, buy into the sort of the wealth of it. You almost feel that it's yours.
The wealth effect.
The wealth effect. I like that. So I'd be in complete agreement. In terms of how do you deal with it, I think it's forcing yourself, whatever position you're in, is to take the time to, which links back to what we've said on previous shows, which is think a bit negatively. When you're sitting in that profit, remind yourself, say to yourself, what if this trade was to roll back over and stop me out of break even? What if this trade was to roll over and go and hit my stop? Is actually entertain that, rather than almost forgetting about that possibility and being too one-sided with the trade. Because it's easy to, it's hard to future pace a trade when either the trade's in a losing position, or in this scenario, the hardest trade, you're sitting there and you can start to slowly see that profit come away. But if you imagine that trade hitting the stop before it has done it, it at least prepares you for that potential.
Well, let's use a real world example, shall we? So we were talking this morning. Ali knows what trades I'm in and stuff, and vice versa a lot of the time. And so I've been in a trade since the late end of 2023. We're filming this in early 24, or early-ish 24, mid-January. And I've been in a very good open profit, well over 6 figures, 150,000 or so in open profits, and right at its peak equity, I would around that sort of area, and literally as we speak, it's all come all the way back down. Now, we were talking about this over coffee, and that's what we said. That's what I do, is to prepare for mentally, always, as much as you get to the point where you think, yeah, this trade's fairly safe now, I think it's fair, and it's not going to become a loss. The stops have been trailed up a bit, but they're still not being trailed up to the extent where I'm locking in 100,000 of that 150. It's going to give back a substantial amount, because the longer you want to hold on to a trade for, the wider the berth you have to give it. It's as simple as that. Yep. So if you've got a target which is right up here, then there's no point choking the trade and moving your stop, aggressively under the trade, because you'll never get to those targets. So you either go for that bigger target and have a wider stop, which means that the potential for it to have a good run and roll all the way back over is going to be there, or you don't have as big a target. Just so happened my piece of analysis has this wider target, and so I want to hold on for that. And it's looking at this moment, as we were saying this morning, like I'm about to be literally, I'm nothing away really from being trading stopped out now. But so of course I would love to have that cash. I would love to have that money banked, as we discussed this, of course. And there's a wealth effect with sitting on some decent gains and all of that. But you, as you said, I have to project forwards, right? Well, what if this doesn't work out? So when it does happen, I'm not actually feeling that much. And that's really where it should be, because then that allows you to move on to the next trade, to say, oh, okay, that's a shame. And that's it. And that's where ultimately where people want to be emotionally, is to say, oh, that's a shame. That was a nice trade. Yeah. And if you can be like that emotionally, and the only reason I'm talking about the money here is because I know that people are trading with, might be in open profits of £100, and so to try and desensitize things for those people who are trading with just maybe a few thousand an account, or 10,000 an account, or 20,000 or whatever, just to say, well, I had a substantial open six-figure profit there, which has come back over. So maybe the reason I'm saying that is to help others when they're looking at their few £100, maybe 1,000 or two, and it rolls over. Well, it doesn't get any easier, because the bigger your account gets, then the numbers just get bigger. So the only thing is, I think that with the more experience you get of this sort of thing, you just trust that, okay, it didn't happen this time, but the next time or the time after that, it'll happen. But if you can be able to shrug it off at the end of that, because it really is the hardest trade that you're going to have to go through, then you're already resetting for the next one.
Love that. I think there's a couple of things. It comes back to the logic versus emotion, because there'll be people listening to this as soon as I know this, because I've had personal examples. Yeah. I've talked to people about examples you've had, and there'll be people screaming, going, "Why didn't you bank it?" Yeah. Well, that's the
didn't hit target.
Well, that didn't hit target, exactly. But as soon as the stakes to somebody perceived to be higher, so like you said, if there's somebody, and that's no disrespect to them, they're trading with a £2,000 account and they've got £100 in profit. As soon as they hear those numbers, the thought of that money rolling over and disappearing is almost unbearable. So their brain starts to go, well, why didn't you lock it in, or trail it? And it comes back to what we've said before: is you're following your process, which again is logically seems easy. Well, just follow your process, trade the plan, follow the plan. But when the stakes are higher, logic is harder to keep to. Yeah. You could sit there and say, well, how much have I got at risk? And what's the amount versus the percent risk will still be within your risk parameters. But something happens when numbers get bigger, 5-figure returns, 6-figure returns. And I think what's really interesting is, obviously you've been in this trade a while as well, which again, that can create an issue in terms of the trade being harder. So not only is the trade rolled over, but you've been in the trade and you've been invested for time, and then it's rolled over. Yeah. So there's a time element to it as well. Yeah. But tracking back our little conversations, what I always find really interesting is it's almost the little things, is when you say, oh yes, this trade's at X now, and you always finish the sentence with, now I've said that, it will probably roll over, which isn't actually a bad thing, because you're reaffirming to yourself that this isn't my profit yet, this hasn't hit target, and it might just roll over. So I think it comes back to this idea of projecting what could happen. So when it does happen on certain trades, you're okay with it, and you just move on to the next one.
And I think just to add one final point maybe to this is, what a lot of people will do when they're in a situation like that is they'll say, right, I need to fix this. This has happened to me. I need to change something. Now, you might need to, if that's a style of trading, that if that style, let's say, I don't know what the R number might be. So, someone else, it may have been a 7 or 8 R trade, and they're like, actually, I'm not comfortable with a 7 or 8, trying to go for 7 or 8 Rs because yes, the win rate is lower. More of them will get to 3 or 4 R and then roll over. So actually, I think I'm better off in just going for the 3 or 4 R, let's say, target type trades. And I think there's nothing wrong with that. Trade according to your personality, according to where you're at emotionally as well. It may be that you haven't earned the right, as we say, to go for those bigger risk-reward ratio trades yet, because emotionally you're not developed enough as a trader for it. So there is an element of that. But outside of that, I'm not sitting there thinking I've got to fix something here. Next time I've got to do something, because there's nothing wrong with it. The trade's good. The setup, the analysis is all good. It's just that it's fizzled out. And I know if I take 100 trades like this, well, I know that 100 of them aren't going to all go up to their target. Some of them are going to fizzle out. So does that mean that if I take another 199 trades like this one, that I'm going to have to make adjustments? Well, no, because then you're going to miss out the ones that do go. So trust in the process.
Totally agree. And I think what you said about the idea of not everybody has earned the right is, let's say we were sitting here and we were talking about the trade hitting target. There could be a load of people listening going, right, well, that's what I need to do. I'm going to change now, and I'm going to start running my trades for longer. But I think a lot of traders aren't ready for that. I think it takes time and resilience to be in trades for, months, 2 or 3 months, almost 4 months, and to be running trades for longer. And it isn't for everyone, or it's something you build to. So it's trusting in the process and not jumping ship, because you hear about somebody who's, had a 10R trade and you think that's what you need to be doing.
I mean, I had one of my trader I know, he did a 93R trade in 2002. And of course, everyone's thinking, oh, I want that. Yeah, but look at what he had to do. He had to hold on to this trade in it for 9 months. And he had to sit through all these pullbacks and retracements. And what if, and that's what I was saying to this group of traders at the time, what if he'd have been up 40R and then it had retraced all the way back? Would you have wanted that? Yeah. Well, you would have said no. So you have to be careful what you wish for in trading. So you want those big mega return trades, but you've got to say, oh, okay, how many frustrating trades have I got to take in order to have those few? And then I've got to be comfortable with that as well. So anyway, there you go.
That's how it rolls. So, a couple of questions. I think we've had something similar to this before, but it's still, I think it's worth touching on this one. Is it best to have one or multiple trade accounts? So I think really it is trader specific. It isn't to say that all traders should have one account and trade out of one, or all traders should trade out of multiple accounts. Certainly from my point of view, if you are choosing to both day and swing trade, then you should definitely be doing that from separate accounts, because the fluctuation in your results, just the pure trade frequency, you don't really want to be trading those two out of the same account. It's a different mindset. It's a totally different approach. So from that perspective, absolutely, you want to be trading out of different accounts. But I think it's really important to look at what you're doing as a trader. Why do you want to have multiple accounts? Are you trying to spread your risk? Is it because you don't want to have all your money with one broker? So there's a lot of things going on that could determine whether you have more than one.
Yeah, maybe just one thing to add is totally, day trading and swing trading, having different accounts if you can do it. Psychologically, it makes it a lot easier. But one person I came across, actually I know a few now who do this, is if you get to a point where you've got a bit more capital, some traders, let's take a trader who's been trading for years with a given amount of capital, they've been growing it, and then maybe they've added a bit, and all of a sudden they've gone from trading with 20,000, 30,000, 40,000, and now they're trading all of a sudden with 100,000. I know traders who have split the 100 into two 50,000 accounts.
Yes.
They're doing exactly the same thing on both, but because the numbers on both are slightly lower, psychologically they just find it easier. Yeah. They just split their large account. It's not like even a day trading versus swing trading. They're just swing trading, and they've split them anyway just because of the numbers.
Yeah, I've heard of other traders that have done exactly the same. Right. I think that's great. And then, lastly, I think it's a really interesting question. So this is, how do you deal with the short-term random distribution in your trade performance. So I think what the person is saying is, how do you deal with the fluctuations in your results, essentially?
Yeah.
Which I think acceptance is the first one that comes to mind. Is you roll the clock back to the early days, and I think a lot of traders go in with this idea that they know logically they can't control the market, but their actions don't necessarily correspond. So they are trying to hit a certain monthly target, trying to hit a certain number of trades, or we've had scenarios where people have, they've faced 3 losers in one day and then they stop. All of these things are just ways of trying to manipulate what is, over the short term, a random distribution of trades. And I think the way to deal with it, personally for me, is to find ways to expand your thought process and your space and time horizon. So the 5 trades I placed this month, or the 1 trade I placed this month, is out of my control. I can't choose how many trades are coming this month, and I can't choose what the result of those trades will be. But over the longer term, and having the data to correspond to that, and following my trading plan and being strict about how I approach the market and approach the trades I place, helps me have a longer term picture. So for me, it's really primarily just accepting that I have no control over what happens short term.
And I think I haven't got a lot more to add other than using self-talk. And so the things that you've already said, but I do think talking out loud to yourself. Psychologists have proven that it's a better way to deal with things, rather than just internalizing it and saying, "Oh, yeah, I'm just accepting this," or
Yes.
I have to accept this, and it's a random nature, and it's the in the short term versus long term. Just talk those things out externally, like if you were like we are talking right now. Because you fire different neural pathways when you're talking out loud, as opposed to when you're having an internal dialogue. So I do think that's really important, just to remind yourself, this is just a very small number of trades within the next however many trades I'm going to be doing, and the random nature distribution, as you've said, is random in the short term. How do I deal with this? Well, keep reminding yourself that is exactly what it is, and that's what the process is. Keep reminding yourself. Again, I do think that newer traders, it's harder for them. I do empathize, because it's harder for them to trust that process, so to speak, because they don't have the experience. It's one of those things in trading that experience counts for so much, because they're like, I know I've got to trust that this is just a short-term random distribution of wins and losses or whatever, but they haven't got anything to fall back on. They haven't got any history. When someone's been trading for a few years, I've been through this before. They've got something to draw upon. Where someone newer, who might only be 6 months into their trading, hasn't got the same number of instances to draw upon. So there is an element of trust there, and that's why they have to draw on data, historical data, which all of these things help with that. And they do need to trust their processes if they're doing that.
Good. On that note, I think trust the process is a good way to end the show.
Perfect. Yes. And what's his name? It's Ali Crooks.
And what's his name? Charlie Burton. We'll see you next time.
Trade safely out there.